Hello, welcome back guys. In this video we are taking a look at Apple, which today was up about 3% as the whole stock market pretty much did amazingly well. You can kind of briefly see that here the Nasdaq was up 2.27%, that everything was in the green. If we go back to our tool here in our metrics page, you will see that Apple is actually up 3% and about 1.3% in after hours. We'll see if that goes through tomorrow. But Apple has been generally speaking down lately, and if you take a look at the month chart that you can see here, it's a story of the company going down significantly from 170 almost to 140 right now. And so in this video we're gonna be taking a closer look at the financials of the company, the latest quarter, and see what we are expecting of Apple really in the upcoming quarters pretty much, and whether it's a nice opportunity here or it makes more sense to potentially wait it out a little bit. So let's take a first pass here of the earnings report, and you will see that Apple had actually iPhone and services drive June quarter record revenue is what they had there. And you will see that the company posted the June quarter revenue record of 83 billion, which was up 2% year over year, and quarterly earnings diluted per diluted share of $1.2 over here. Now, I want to take a closer look, of course. Again, in this video, we're examining Apple in a little bit more detail here by taking a look at the consolidated statements. And you will see here that compared to what they did back in 2021, the company had a little bit of a decline here in terms of the products, and you can kind of see it here. Yet services are actually significantly higher than June 2021. And so this caused an increase in the total net sales of the company. As you will see here, it's about 2% is what we saw a little bit earlier. And you will see here that it's interesting to see that the company's operating expenses have also increased from 11.1 billion to 12.8. So you will see that this is a significant increase again in terms of total operating expenses here. And this is why you are looking at net income actually pretty much going down. You will see that the operating income went down, and this resulted in net income that is actually 19.4 billion over here compared to 21.7 that they did the previous quarter in 2021 here. So that's a pretty significant difference, as you can understand. Although if you take it to the 9 months ended, pretty much for June, that is, you will see that this was 79 over here. So this was higher than the subsequent 2021 pretty much period of 9 years. And you will see that the diluted earnings per share here, again, it's a little bit lower, 1.2 compared to 1.31 over here. But overall, for the 9 months, 4.8 compared to 4.42. In terms of net sales by segment here, which is always interesting to examine what the company is doing in terms of all the different segments, you'll see here that obviously the US is taking the larger piece of the pie, and then follows Europe and China. And again, this results in a total net sales of 83 billion over here. So as expected, yeah, is America, Europe, and China pretty much the biggest, the biggest forces here in terms of Apple's sales. In terms of categories, which is always interesting, you will see that the iPhone dominates as expected, and it's up from its previous quarter last year. And interesting to notice that Mac is actually doing worse than what it did last year, and the same thing with the iPad, although marginally it's about the same. Also, wearables are also down here, home and accessories, and it's services that actually save the day, as you'll see here, with 19.6 billion compared to 17.4, and this actually makes up for the loss that the company had in like the Mac, iPad, and wearables department here. Although again, they had a little bit of an increase here in sales in terms of their iPhones, which is always nice to see. Okay, let's move on a little bit. Couple of things I wanted to point out here in the balance sheets. You can kind of see the total current assets and the non-current assets of the company, and pretty much the result, which is the total assets of the company. And you will see that these have been going down since 2021 from 351 to 336, and it may sound bad, but you can kind of see here that this is mainly because of the cash and cash equivalents. As you will see here, 35 to 27 is a massive decline here. So what's the reason behind this? Now, of course, the important reason behind that issue is the fact that the company has been buying back shares, and when you buy back shares, you actually spend a lot of your cash, in your balance sheet. And so this is why you are looking at less total assets, but this is still a pretty good thing for the company, buying back shares, and especially investors who have been investing with the company for a while now. it's nice for them to see that their stock is actually worth more now, since Apple is basically buying back some and retiring it. That's how it pretty much works. And so you will see here that if you take it down to the total shareholders' equity, it's a little bit less. But again, remember that there is also less stock, which makes up for the less equity here, and it's probably even better, or more than likely, actually, even better than actually having the extra cash here. And also worth noting that the operating cash flow of the company has increased. You will see it here, cash generated by operating activities, 98 billion compared to 83.8 that the company did the previous year, the previous quarter of that year, of the corresponding year. And that's a pretty significant increase as well. Very nice to see for the company too. In terms of investing activities, spending a little bit more here, purchasing less marketable securities than in the past, as you'll see here. But what happened here is that they sold less also of their marketable equities here, the securities that they have, so they still are holding more. And so in terms of financing activities, spending a little bit more here as well. As you'll see, this is mostly repurchases of common stock. The company continues to repurchase common stock since last year. Pretty much keeps doing that, repurchasing more and more and more and more, which is again awesome to see pretty much here for the company. And this is why they're spending quite some in terms of financing activities. The vast majority is basically cash repurchases, common stock repurchases, which are paid with cash. The company has a lot of cash and buys back shares, actually repaying back its shareholders doing that, because now your stock, as I mentioned, is worth more if you are holding Apple. Now let's take a little bit of a look at some interesting news pieces here that I think are very, very interesting here for the company. And as you'll see here, Apple's App Store revenue fell last month as game purchases cooled, Morgan Stanley says. This is about September. You will see that Apple's App Store revenue declined about 5%. That's in the services section of what we examined earlier. Remember, that was the previous quarter, but now this is talking about September. This is talking about last month pretty much. And according to Morgan Stanley, we're going to be having a steep loss since the bank started modeling the data pretty much. And it's a potential sign that the App Store could face challenges as the economy slows. And so this is probably not really expected here, and the App Store seems to be seeing some declines, is what Morgan Stanley talks about here, which kind of makes sense thinking about what is currently happening in the markets. Probably people and even Apple owners pretty much paying less than what they used to, even for Apple stuff here, and especially the store. Some other interesting things here. Warren Buffett's Berkshire Hathaway has seen a $36 billion loss pretty much here, a stake that was wiped off this year, which is $5 billion more than it spent on the iPhone maker shares, which is very, very interesting here. It has actually gone below their cost basis, and I really, really wanted to talk about this one because it may signal an interesting opportunity as well, this kind of event over here. You will see that Warren Buffett's Berkshire Hathaway has seen its Apple stake drop in value by $36 billion, and the decline in worth exceeds Berkshire's $31 billion cost base for the position. Very, very interesting here. And Apple stock has tumbled 24% this year on fears of an economic downturn and flagging iPhone demand is what we're seeing here. So yeah, the article talks about what has happened here. The famed investors, that's Warren Buffett's company, owned 908 million shares of Apple with a cost base of 31 billion at the end of December. The Titan stock price has tumbled 24%, reflecting a market slump pretty much. So as a result, Brexi's stake has plunged in value from 161 to 125 billion this year. Meanwhile, Apple's market capitalization has shrunk, obviously. So Buffett and his team plowed about 36 billion into Apple between 2006 and 2018 and cast out around 9% of the position in 2020. They purchased another 3.9 million Apple shares in the second quarter this year. I think this one is a part of their stock that has actually gone down. But they are still very profitable, of course, with Apple. But it's interesting to see that the company has declined more than their cost basis here. Very, very interesting. Okay, so the next one that I kind of want to take a little bit of a look here. Apple stock news and forecast. Apple falls 9% on the week as iPhone 14 orders look weak. And you will see here that orders look to be weaker than expected here. And Bank of America actually downgraded Apple in a move that you don't really see often for Apple stock, of course. It remains on their throne, of course, as the biggest American stock, but that throne looks a little wobbly after a hectic week. As you'll see, Bloomberg began the bad news brigade when it reported that Apple had asked some of its suppliers not to increase iPhone 14 production. The market naturally assumed that this was down to weaker than expected demand here, and this is why we had a day where the stock actually fell at about 5% for the day. Although today is up again pretty precipitously, actually, at about 3% right now. It may actually even be close to 5% when the market opens up tomorrow. We'll say about that. But Apple stock forecast, we have got some potentially bad news out of the headway of earnings season, is what the article is actually pointing here. Apple reports earnings in about 20 days from now, 27th of October. And we're likely to see some positions closed as investors flatten risk books. The article is talking about pretty much the company potentially being a little bit risky right now. And we could potentially see some people selling. Now, the company has been oversold lately, is what we are seeing here in terms of their technical patterns overall. But we are expecting a little bit of a decline in what the company's financials would be, based on the fact that we are looking at lesser demand here and potential actually a decline in the earnings that the company is making from services, for example, like the App Store is. So we may want to stay a little bit vigilant about what is going on right now with Apple. And even though the chart could be looking oversold, as you'll see here when we're talking about trading, we are mostly long-term investors here, and it may not be the proper time right now to be buying Apple. Now, the proper time, what is that proper time? If we go back in our tool, of course, we'll use our tool here, for which you can become a patron and basically get full access to this one. You can visit our link in the description box below this video if you're interested. But you will see here that Apple's P ratio and price to free cash flow ratio has been dropping quite a lot recently because the stock price has been dropping, of course. And we are at a point where it seems almost very, very fair here. Now, is that fair enough? We will examine that in a little bit more detail when we take a look at our stock evaluation tool. But you will see that the company has been buying back tons of shares, and this is why their total equity has been going down. It hasn't been growing, it has been actually going down because they have been buying shares like crazy. And it may make sense here, we will see. Now, the company's financials have been stellar. I have talked about the company multiple times in all sorts of different videos. And the company's financials are pretty great. The margins are amazing here. The return on equity is a little bit of a thing here because it's very high due to the fact that the company's total equity has been going down. And when your total equity has been going down, your return on equity increases as long as your net income stays the same. And this is sort of like a way to circumvent pretty much the return on equity metric and make it look better. In terms of the dividend yield, the company just pays a little bit, 0.6% in the last 12 months. If we take a look at our dividends tab here, our tool, you will see that the effective one right now, based on the current price, 0.65, which is 23 cents on the stock, pretty much. The company keeps increasing its dividends pretty much year over year, as you'll see here. Now, let's take a look at our stock evaluation tool and see what's going on with Apple. Now, you will notice that Apple's revenue growth has been at about 12% here pretty much every year, on the last 5 years that is. And last year it was amazing, sitting at near 33%. Now, based on what is happening in the current economy and potential declines here, I want to go significantly lower. And of course, we could be looking at some potential analyst estimates here and see what they are saying too, in order to help us maybe get some sense, although the averages also help a little bit. So what should we be using here? So analyst estimates pretty much see a decline in the amount of revenue growth that the company is going to be making for the next few years. So I'm going to go somewhere between 3, 4, and 5% here. Again, we're expecting a slowdown, so I want to be super conservative here for Apple, especially based on what we are seeing right now and the things that I talked about earlier, a decline in the services potentially department and a decline in the sales of the iPhone as well. So it may make a little bit of sense to go a little bit lower here for this one. Even though the last year has been amazing, I think 3, 4, 5, we can kind of see what we get out of this one. In terms of their margins have been getting better and better. Now the 5-year one has been 22, the last year 26 almost. I'm going to go in between 22, 24, and 26 here. Again, these are very similar margins, so it's not like we're having a huge difference here. So 22, 24, 26, I think it makes a ton of sense here. In terms of the free cash flow margin, similarly speaking, slightly more than 100 typically. So I will go maybe 95 here, 100 and 105. I think that's fair. And 13% for our annual return. And see what we're getting out of our projections here when we hit calculate. Now you will see that what you would potentially expect here, it's about $100 where we probably want to be getting Apple at in order to get it at a very, very good price over here. Maybe a little bit more. I mean, I could potentially think about paying 110 maybe for Apple if I really wanted to get some stock in my portfolio, and I would love to get some stock of Apple in my portfolio. Because again, this is a company that has a lot of positives, many massive positives here, an amazing mode here, an amazing name, a company that doesn't have high metrics as well, high ratios over here in terms of the PE and price to free cash flow, is buying back tons of shares. Another great thing, it's super solvent here, no debt pretty much. Still grows at a slower pace, but still grows, and actually last year has grown very well. Great margins as well, paying a little bit of a dividend, which is super safe. Great things to see here for Apple. So it is a company that I would love to hold and add to my portfolio, yet it still may be a little bit more expensive than what I would chew. So I will wait it out a little bit, see if it goes down at some point. If we have, I would think that in order for this to go down at $100, we would have to enter a pretty significant recession, frankly, because that would mean an about 50% decline here, that which would be where I would want it to be pretty much. Actually, a little bit less, like maybe 40%. But still, that's a pretty significant decline for me to buy this one. And I'm not sure we're going to get that. But if it goes down lower, maybe if it reaches 120, 110, it may require a little bit of reassessment here, because it may be just a good opportunity for at least getting a little bit. Now, again, I think that 100 is probably the nice price to be getting this at. I don't know whether that will happen. We're going to be around and pretty much spying on this one. But do tell me whether you own Apple or not, and what do you think about this company? Are you a buyer? Are you a seller? What do you think they're going to be doing in the upcoming quarters? And what's your price? Where would you be buying it at? And thank you for watching this video, guys. I will see you in the next one. Bye-bye for now.